All right, we're going to go ahead and get started. Thank you so much for being with us. I know how late it is in the day, and apologies that the afternoon has run long, so we really appreciate doubly your coming to this panel. And I think this panel is incredibly important, but let me get started by saying my name is Gracelyn Baskren. I am the director of the Critical Mineral Security Program at the Center for Strategic and International Studies in Washington, D.C. I'm really excited about this panel. I think rare earths are one of the most discussed commodities because they're a little bit of an enigma wrapped in a conundrum in some ways. We know that they are incredibly important. Rare earths are the bedrock of national security. They are in almost every form of defense technologies. They are in our economic, our technologies that enable us to be economically competitive, and they are in our clean energy transition. And in a way, that makes them immune to political change. Because, we in the U.S. have a new sheriff in town, and at the same time, it's not the whiplash where we worry that, policies will change because it's a clean energy commodity. It's really cross-cutting in many ways. But there's a lot of challenges with rare earths. The demand is, high because there's a certain dominance from China in terms of the rare earths supply chain. But at the same time, it is capital intensive. They're not rare, but they are complicated to separate. And we are looking to have a more diversified base of rare earths. So with that, I'm really excited to go into this panel because we have some proper expertise in terms of analytical expertise and private expertise kind of in the supply chain on this panel. So I'm going to go ahead and introduce our panel to kick things off. On my left, I have Omar Butahar, who's the Vice President of Corporate Strategy and Business Development at Ma'aden here in Saudi Arabia, which we know is playing very actively not only in rare earths, but just kind of across the minerals portfolio now as they work towards Vision 2030 and diversifying in that, from that oil-based economy. To his left, we have Patrick Barnes, who's the Vice President and Head of Metals and Mining at Wood Mackenzie and has a lot of analytical expertise at a time when we talk a lot about it without necessarily that real deep understanding of the market dynamics at play, which is one of the things we're here to discuss today. And then to his left, we have Charles Liu, who is the Executive Chairman of Hastings Technology Metals and has been doing also quite active in Saudi Arabia here. So with that, I want to get started in the interest of time. I promise we will give you a little time back today. I want to start with Patrick. We talk a lot about rare earths, the importance, strategic importance. What are some of the risks that are a challenge in terms of getting the investments that we need at scale?
Well, you brought up an interesting point in your introduction about, there's a lot of discussion about rare earths. They've got good branding, they've got a good name, very mysterious, right? Hard to pronounce names of the elements themselves, and very complicated and somewhat opaque setup around the world. So a lot of the challenges that you have in rare earths is not so much the scarcity, the rarity, it's actually finding concentrations and situations and places where they can be extracted profitably, right? So the issue ends up really being about control. And that control is a key thing that makes it a challenge to attract new investment, right? If you look at control, just maybe three quick things, I won't take too long, but three main things to say about control. Number one, it's control of the knowledge, right? Because it is a complex process to separate these things. And the rest of the world, outside of China, is competing with a city, a university, an entire location built around rare earths, around the biggest rare earth mine in the world. That's difficult to compete. It's difficult to build that kind of capability. Same thing around cost control, right? If you've got the vast majority of the world's reserves in one asset, and that's controlled by a state, that makes it much more difficult as well for other people to get involved, given their ability to influence costs and prices. And the fact that it does cost billions to set up a separation facility, or can, and that's almost the amount of money that is the size of the entire industry, right? So it's a lot of money for what's still sort of a small industry. And then finally, on supply, I mentioned that China does have a significant dominance there. Other Southeast Asian countries are coming along as well, but ultimately those are predominantly Chinese owned as well. And it's just very difficult to compete on a cost basis with that level of concentration and control.
What do you think the likelihood of getting non-Chinese supply is? Because as you said, it's very capital intensive, right? Like the U.S. had to front the 300 million to Linus to get some of these separation into MP materials to get these facilities built. What is the likelihood in the current market and given the capital intensive nature that we're going to see non-Chinese investment kind of unlock?
I mean, I think it's hard to predict with exactness, and as you mentioned, it's the beginning of a new era in terms of U.S. policy, which has been a key influencer in this area. But it also depends on where you're talking about in the value chain, right? I mean, at the magnets level and the separation level, it's much more difficult because of that knowledge. At the mining level, I think it's much easier, but I do think there's a significant commitment from the world to make some incremental gains in that market share. So I think we will continue to see investment in Western rare earths. There's a lot of interest in doing it. It's just a question of finding the right opportunities and setting up the right conditions for them to be profitable, to be built, and to be financed.
Yeah, I think that's a great place to tee off to Charles, actually. So how does the West compete with China given the price differential for production, right? We've talked about how NdPr costs right now are not necessarily like, a luring investment into this sector. So how do we compete?
I think to put it very simply, the West just can't compete with China. I think China has a structure that is in place in terms of rare earth production and magnets production that has been in place or set up over the last 30, 40 years. And so they have the knowledge, they have the expertise, they have the infrastructure, they have tremendous government support. It's a national agenda to dominate, right? So we got to look at it, therefore, that whether you are taking the commodity, Nd, neodymium and praseodymium oxide prices, or DyTb oxide prices, or the magnet itself. Now, as you know, magnet is a bespoke product. Each magnet is different from another, depending where it goes into that multiple different applications. So when you talk about how is the West going to compete, the supply chain is quite long, right? You've got 7 steps to get from to get from the mine to a magnet. And each of those steps requires significant capital investment. And because they require significant capital investment, you are in a situation whereby who, in particular, if there's one single entity, one single party, one single industrialist or financier, that's going to take it all the way from the mine to the magnets. Now, the answer in the West is there isn't one. And the reason why there isn't one is because the risk is huge. And the risk is huge simply because it is a David versus Goliath battle, okay? So what I can say, therefore, and I speak on behalf of Hastings, is the fact that for a tiny company like Hastings, we have a vision or an ambition to get from mine to magnets. And that vision of getting from mine to magnets starts with an ore body in Western Australia called the Yangibana project, where we have been gifted, we've been blessed with an exceptionally high-grade NdPr ore body. That starts, from where it starts, that it drives the economics of the project for the production of the concentrate, and then you take into hydromet and the oxide separation. So coming to Saudi Arabia, we've signed the MOU with the Ministry of Investment here, is for the fact that we can see that the government has a very clear agenda under Vision 2030. We heard this morning from the ministers that there will be continued support, continued ambition to drive this agenda to success, right? So we are obviously very confident, very optimistic and hopeful that with the government support and partnering the right parties here in Saudi, what we mine and we produce as a concentrate in Western Australia, we'll bring it here to Saudi to take it downstream. Now, the ambition is to be able to produce it price competitively, because NdPr oxide price is a global single price. And so the support of the government, the industrialists here or the investors here is what we are looking to try and achieve over time.
I think you bring a really good point here, which is it's Australia, it's the Middle East. It's actually starting to be a multi-country effort if you want to give David some, armor to kind of fight Goliath in a way, right? David can't be a single player to work with Goliath, which has been in the, bodybuilding for decades,
Right.
for lack of a better way.
I mean, if I can look at it when I said I speak with some confidence, is that, as you know, in the David and Goliath analogy or story, you know who won in the end, right? So I hope that I've got that single slingshot, working with the kingdom, the people in the kingdom, to be able to compete and therefore effectively being able to end up having mine-to-magnets magnets made outside of China and compete in the global space.
And nobody thought David was going to win, so that's very important. Omar, I think Charles teed up again really nicely for the Middle East. Saudi has been invested so much into building an ecosystem around mining. The cheapest, wind projects in terms of levelized cost of electricity in the world, investing just in the whole mine-to-market kind of segment. What is Saudi Arabia thinking about? What are they looking at when it comes to the rare earth supply chain specifically?
I think Saudi Arabia's Ma'aden, we like the rare earth story. First, the market for rare earth is growing massively. Based on the industry specialists, we expect the market to grow around 9% in the next decade, which is massive, driven by strong fundamentals, technologies that will help the energy transition, that will transform digitally the industries, like electric vehicles, renewable, defense, robotics. The problem is a problem of supply. Today we have two major issues. One, we have the supply concentrated in a single jurisdiction. 70 and 80% of the mining and processing is one single jurisdiction, creating vulnerability of the supply chain and risks. Second one is, today when we look at, there is no enough supply coming, no enough investment coming to fulfill the growing demand. And there is a massive investment that needs to happen in mining, but not only mining, but also the full value chain for the processing. That's where Saudi Arabia can play. And we believe Saudi Arabia can have a transformational role in the risk in the supply chain. One, because of the abundant resources of rare earth. The kingdom is highly prospective of rare earth. The kingdom has invested massively in exploration under the Saudi vision and is uncovering significant potential for rare earth in the kingdom, making it a good place to invest in the upstream. So this is number one. Number two, the kingdom enjoys a strategic geographical and geopolitical location between the east and the west, being the bridge between Goliath and David, and bridging these two gaps. The third one is competitive advantage from cost perspective, including cheap cost of energy, cheap feedstock. Hydrochloride acid is a major component for separation, but also best-in-class infrastructure. This will help to make projects profitable and drive the cost down while reducing the the environmental impact for such things. Moreover, in countries where we see a change of administrations every 4 or 5 years, here the kingdom is betting on mining. And mining is at the heart of the Saudi Vision 2030. And we have a very friendly, modern mining law for mining. Second, the country is even investing in mining and building partnerships to make it so. Betting on, and looking at all these factors that we just enumerated now, we see the country, Saudi Arabia, can play a major role both at the upstream, but also incentivizing projects from all over the globe to make the Mecca and the hub of downstream processing for the full steps of the value chain.
And Ma'aden has managed to do something incredible, which I think I saw their share prices are up 233% in the last 5 years. So being able to strategically deploy capital and priorities, but in a way that's not commercially sensible.
So Ma'aden has created, and the kingdom through Ma'aden, our majority shareholder is Sovereign Fund of Saudi Arabia, has created the mining giant. Today, actually, our market cap changes every day, but it's around $50 billion Since our IPO, we have grown two major industries. One is the phosphate mining industry, and we did it through partner, through building the capability in these two sectors. Same thing for aluminum. Now, we're looking also into critical minerals and how to play in these minerals for the future that are important for the world. Energy transition and digitalizations of the industry are two critical components, and we believe the mining sector can help on this. That's why Ma'adin wants to play in the critical mineral and deploy capital in a sensible way. And our vision is long term. We believe on the sustainable growth for the long term. We're not here for return on the next quarter or the next year returns. We're here to create sustainably value for all the different stakeholders whether it's the shareholders, the country, the communities in which we operate.
Yeah, thanks so much. So I want to go to a shift to another question for all three of you now, which is, I mean, we know that the long-term demand look is relatively good for rare earths. There's a lot of misconceptions societally about rare earths. People ask all the time if tungsten is a rare earth and germanium and gallium, right? Because there's not necessarily, if it's critical, we sometimes want to call it a rare earth. But as it relates to our rare earths, we know that the demand is good, but there's still that market hesitancy because of prices and costs and risk. What does it take to get the investment that we need to get that mine to magnet supply chain built outside of China, acknowledging that China's already shown repeatedly a willingness to weaponize rare earths specifically, right? Going back to 2010 with the dispute with Japan, going to the ban on rare earth processing technologies 2 years ago, less than 2 years ago. What does it take to get David well equipped, if we keep that metaphor going? What does it take from government? What does the private sector need? Charles, let's start with you and come back this way.
I think it's a multifaceted question to begin with, so I'll try and answer that in the time available. I think to start with, government support certainly helps. But in that statement, there is a lot of complexities when you talk about government support. So I'm not sitting here saying that we want handouts. That's not what I'm saying. What I'm saying is that in the case of Saudi Arabia and the kingdom, we see the government having the political will to diversify its economy and therefore has a very clear agenda to build a electrification or renewable energy, part of the whole e-mobility agenda that is a movement that's taking place worldwide. So with the political will of the government, I believe, and in our interactions with the ministries here, that we can see it is a very good starting point. And that starting point, coupled with the things that Omar has said in terms of the lower cost manufacturing base, lower cost production base, lower cost operating base, right, in terms of OPEX, gives a producer like ourselves the advantage that we are looking for to be able to compete in the David-Goliath scenario, right? And so in order to get funded, every funding agency, every lender is going to look at the economics, they're going to look at the financial model, is going to look at the numbers and whether they stack up or not. If you cannot produce competitively at the cost whereby when the lenders do their financial modeling and sensitivity analysis, right, you haven't got a case. You're not going to get the debt funding. So that's what I mean by we are not looking for handouts. We're looking for incentives, we're looking for support, we're looking for low-cost electricity, we're looking for low-cost labor, and this country provides a lot of that from a producer perspective. So what we will strive to do is to effectively create a Australia and Saudi Arabia relationship in building this supply chain of mine to magnets and integrating it all under one company, under one enterprise, and having partnerships, equity participation between us in Australia and the investors here in Saudi Arabia. And I think I'm optimistic, as I said in the beginning, that we stand a good chance. And the interactions we've had with various people here in this country has been very encouraging.
And I think taking it even one step further, I mean, Trump has a really strong relationship with Saudi Arabia, and he's maintained that throughout the last 4 years going forward already. He's engaged with the government. So, I mean, that could be a partnership that continues to extend, given, again, the rare earth supply chain is very important to him. Some of the early government financing for our own separation facilities were done there. So we do see a more kind of defense-focused supply chain in the years to come, where rare earths would potentially prioritize ahead of other base metals in terms of government support, partnerships, et cetera. So Saudi could play a very important proxy role in that, not proxy, but like kind of intermediary role between other strategic partnerships for countries like the US, I think. Patrick, you come from a very different perspective. You obviously engage with a lot of private sector companies here.
Yep.
What do we need to do?
I mean, I think there are some things the private sector can do. They're mostly around being as cost competitive as they can be, right? But what we've seen is there's a lot of great intentions behind slightly more altruistic things, but they tend not to work in the end in the private sector because at the end profit wins out, right? Green finance has not really materialized to the degree that a lot of people hoped and thought it might, 4 or 5 years ago even, right? And so at the end of the day, I agree, it really is going to come down to government intervention, or probably government's intervention, right? Kind of working through these supply chains with collaboration. Charles mentioned a bunch of good suggestions there in terms of things that they could do to help. There are other things, just, some of these are more likely to work than others, but you can look at, price floors or commitments to take offtake at certain prices and things that de-risk that downside, enable lenders to move, even if prices are low. That's difficult to sustain over long periods, but with government commitment and the right structure, it might work, right? It might be possible. It's worth considering. I know people do consider that. There's a range of other things too. I mean, it doesn't have to be government. It could be, an end consumer that's willing to commit to pay a bit of extra to have, less exposure to China or something like that. But at the end of the day, where so much of the market is controlled by a state-owned entity in China, you really can't compete with an entity of that scale unless it's other governments intervening.
Do you think that there's appetite from governments to go into markets with big, like rare earth reserves, like Brazil's, Vietnam's? Do you think there is an appetite to lend support to projects in these types of like emerging jurisdictions that may not have, the same amounts of capital, some challenges around, permitting indigenous communities, but where you have massive deposits?
Yeah, I mean, at WoodMac, we do a lot of project finance support, right? So I can't obviously disclose the names of who's looking, but there are, development finance institutions and, Western affiliated financial institutions that are looking very, very closely at rare earth developments in the kind of locations that you mentioned for exactly those reasons, right? They have to get comfortable with operating in those jurisdictions. They have heavy due diligence processes, but they are looking closely at it.
I mean, I think the U.S. government has taken a strong interest in Brazil. Our own Development Finance Corporation has been down and backed a project there. Mm-hmm. Again, seeing that strategic value of feedstock, Omar, what again? I mean, you have a lot of the government has a lot of support, but behind mining here, you have a lot of private engagement. But what does it take in terms of getting the rubber hits the road on rare earths?
I think there are a couple of things. So, one, there is the West, and there is Saudi Arabia. I think the West, and this is something not only linked to rare earth, linked to mining. I think the world of investors needs to make peace with mining. And today, when you look at the multiple of mining sector, you look at some of the numbers that are even lower than tobacco. Can you imagine, for the sector responsible to bring the digital transformation, the energy transition, is not funded enough. This is not something that we have in Saudi. Look at the multiple of Ma'adin. I think retail investors like mining in general. In that regard, in Saudi Arabia, we have a very supportive mining jurisdiction. So the government, from the regulatory point of view, is supporting mining. It's clear, it's stable, it's sustainable for the long run. We have the government putting the right ecosystem to make every single project in the sector profitable. Because at the end of the day, we are in the business of making money. We have retail investors, and the project doesn't make sense financially. We cannot bring it to the board, to the approval by the board, because we have fiduciary duty against those things. While we're contributing to the kingdom diversification in that regard. Things are happening. I think we have the right resources, we have the right infrastructure, but more importantly, we have the strategic vision from the leadership in this country to make things happen. And this strategic vision doesn't change every day. It's clear. In the last decade, everyone is clear. As long as we bring something that makes sense, we make it happen. And we're lucky being in this jurisdiction. And may God make this last.
Absolutely. So my final question to you, because we have 2 minutes left, is: Are you what is the time horizon that you're optimistic? If you're optimistic, it's okay to not be, on creating a semi-stable supply chain, kind of for rare earths outside of China?
I think in over the next 5 years, it is certainly achievable. With the support from the various stakeholders and key players, right? And as Omar said, what the kingdom here offers is the fact that there is a clear objective, and from my perspective, the political will of the government and the desire to diversify the economy and to achieve those the Vision 2030 agenda. I think that is important. That sets the bedrock in which we can work from, And I think as we continue to spend time here and engage with investors and lenders and industrialists and partners, over the next 5 years, these things will be step by step. It's not going to all happen all at once. Step by step, gradually put in place. And what we bring to the table is the transfer of knowledge, as well as the transfer of technology and the transfer of capital, even, because this is a cooperation, right? And therefore it's cross-border. And if it goes even to the point of being G2G, all the better.
I think G2G is going to be very important in a sector that's struggling with commercial viability. Patrick?
Yeah, I think it's likely, again, in the next 5 to 10 years that we see some very positive developments, good examples. In terms of providing a significant portion of Western demand, we're decades away, at best, right? And so, at the end of the day, China is going to continue to rely on the US and Europe for demand. Europe and the US are going to continue to rely on China for supply. But I think there will be pockets where that loosens up and there's a little bit of de-risking, but it's not going to change the situation anytime soon.
It wasn't even 10 years ago that MP Materials went looking for financing and they couldn't get any Western financing. Our American mine had to go to China for financing because we didn't see the strategic value of it at that point. That was less than a decade ago.
But again, there will be good examples, right? There will be progress.
And we've already seen it with the amount of government support starting to unlock to create that enabling environment for the private sector. The G2G, the cooperation agreements that are being signed. Omar?
I think we will not replace China at all. However, I think by the end of this decade, we're going to have alternative sources to China. I think Saudi is building a downstream industry for electric vehicles, so there is big plans for electric vehicle, 500,000. This is by the end of the decade. We have also big plans for wind turbines. I think we need to bring sustainability for our own industry. So this is number one, and number one focus. We're going to bring alternative supply to allies in the US, in Europe. But China will continue to be here. And China cannot feed all the world demand, given the growth that we talked about earlier. If China today, based on the current production, they have more 100 years, but if you account for the growth, this number will go sub 25 years. So I think even China needs the world to bring alternative supply. Otherwise, the consumers will look for R&D to engineer out the rare earth from the magnet. So I think the whole industry needs more sustainable supply. I think Saudi have lined up the planets to make it happen. I hope that the world will do the same as well.
Yeah, it's really de-risking and not decoupling. Well, I don't think there's a world without China. No matter how you feel about it ideologically, it's not pragmatic.
I agree, Grayson, and it's not only the case for rare earth, it's the case for copper, downstream for aluminum and all other commodities. I think we need just an alternative, not decouple. Yeah.
Absolutely. I mean, it's a really big landmass. Geology is just, bless the large landmass. So, yeah. Well, thank you so much. I know it's really late in the day. I appreciate all of you kind of hanging around and being part of this discussion. Please thank our panelists for their time, and thank you all for joining too.